Hello traders, Gary Wagner here, just about 10:10 in Honolulu, 4:10 in New York. It is Friday. Happy Aloha Friday, as we say on the islands. It is September the 9th, 2016, and this is the Daily Report for Gold and Silver, our weekend review in which we combine it with trending markets to give you an overall sense or feel for activity this week in the market, as well as our forecast for next week. And my God, what an ending to the week. Statements made by a Fed president over in Boston sent this market into utter chaos as we saw the Dow closing off a tremendous amount in terms of triple digits. We'll look at that in a second. Precious metals, of course, obviously falling out of bed. Gold closing down about $9, $8.70 when we look at COMEX futures at $1332.80. It traded to a low of $1331.80, and the high today was $1343.60. Of course, we did pull profits, small profits, but profits nonetheless. As the market came down, we did trail our stops up the other day, and on a day where we're seeing nothing but red, it is good to report profits to our subscribers. Now, next market we want to look at, of course, that was basically COMEX. Spot gold off about $9, also $8.43, current bid, $1329.02. The low, $28.30, so we're just off of the low right now, $1339.57. Now, in terms of the net drawdown, about 0.6%, but take a look at silver traders. A candle that burns twice as bright will burn half as long. And we can see that silver really got slammed today, $19.04. It's still actively trading. It's just getting ready to settle or close for the day. A low 19.05.7, high 19.65. And as I said, currently closing around $19 per ounce. We also had positions in silver. We also pulled profits on that. We'll talk about that when we pull up our gold and silver charts. Lastly, COMEX futures in terms of, COMEX silver, 1912, down 55 cents or almost 3% on the day. So traders, no doubt an interesting day, an interesting week in the markets across the board. Precious metals really down moderately, but they have been selling off for about the last 3 days. First chart that we're going to look at on today's show, of course, is a daily chart. Has our current Elliott wave count as well as some fib retracement areas. There's a couple of fib retracements, of course, that are key areas. We're not really going to focus on this long one, but the long one really starts from about 1200 up to about 1380. I've got another fib retracement that really starts at 1305, which is the bottom of this last rally, up to the top, as you can see, 1357, and we have various fib levels there, and that's really what we'll want to focus on. Now, first to our trade. When we take a look at what happened, we did make some money. Not as much as I would have liked to, but nonetheless, we did make some money on the markets. We entered a trade last Friday. Roughly, we got in at 1328. That is right in this area here. It was a very fast market. You can see that fast market. This is our close, of course, on Friday, and this of course is our high coming in tremendously up to about 1334, but we got in roughly between 1323 and 1328. As I said, it was a fast market. We marked ourselves in at 28, had a long 3-day weekend, and then on Tuesday, bam, we had this tremendous $27 pop. Market moves to the upside and really hits these highs that we have not seen for quite some time, about a month. And the other thing that we want to realize with gold is even with all of these ebbs and flows, we're still up in gold about 20% on the year. Realize that at the beginning of the year, gold was trading at 1050. So we've had a tremendous upside move in gold that I believe is absolutely still intact. And I want to lay that out first of all, but let's get to our trade. So the market comes up the following day. This, of course, is Friday, Thursday, this being Tuesday and Wednesday here. Market sold off, and my statement on Tuesday to our daily subscribers was that it didn't really concern me. It was a little bit of backfill, but I don't think it was any kind of key or pivotal reversal. looking at that in hindsight, it actually was some sort of a key reversal. I'll tell you where I think we'll find support in a second, but it really did sell off following day. This, of course, yesterday we had about an $8 drawdown, and this is when I realized that without a question of a doubt, we really got to tighten these stops up. So we moved our stops to just below 1337. I'm marking us out at 1336, which is right here. And so we got in at 28, we got out at 36. We did make a profit. It is not as much of a profit as I would have liked to see because we only really captured about a third of this move right here. But nonetheless, as I said, on a day in which we saw these markets get devastated, I'm so pleased to be able to announce that we got stopped out, but stopped out in a profit. Now, in terms of what I'm looking at as potential areas for support in this market, as I said, we have this 1 fib retracement that just basically covers this rally. If we take a look at the 50% retracement point, that lines up to 1331, which is pretty much where we ended up today. 61% retracement comes out at about 1325. For this particular move, in other words, this wave 3, to really be a model that we can hold some water to, so to speak, we need to see the market either find support in this area or as low as the 61%, 1320 to 1325. I believe at that point it might be safe to go into the water, and then we need to see this market clip back up. Realize, though, we've got, as I said, 12 days until the FOMC meeting, so we could see some real increased volatility, but these are the two areas that I really want to look at next week. So traders, let's take a look at silver. Of course, we did take a long position in silver. We got in at 1917 when we entered our gold trade. We moved our stops up to below 1938. I'm going to mark us out at 1935. So we made the difference between we bought at 17 and we sold at 35. We absolutely made a profit on the trade. A small profit, but definitely not a loss. And to report a profit, as I have said all throughout the show, on a day when we're seeing nothing but red, I feel very content and I feel very comfortable with that. We're looking at a daily chart, and on our daily chart, my next real level of major support comes in at around 1850. We have to really go back historically to take a look to see if and when the market was at this area here of about 19. And so we'll go ahead and compress that chart. It's going to take a little while for it to fill in, but you'll see now we've got that area. If we draw a line across, and let me go ahead and do that as clear as I can, or as straight as I can, I should say, and it's pretty easy because I'm right on the line, we can see that at least for the period of the last couple of years, there's really been no technical data or evidence that this is any kind of key level of support or resistance. Now, when we look at the 1850 level, we can absolutely see historically we've got this top here. Historically, we've got this bottom here. So to me, 1850 is absolutely the level that we want to look to see if silver can go to before we consider going long that particular market. A new feature that we've added to the weekend review a couple of weeks ago is to reserve this day to answer questions from subscribers. We did get a question this week about the long-term Elliott wave count, and specifically the question that was raised was whether or not our count showed that we were at a major 3 when we hit the top of the market back in 2011, 2012, when the market went to about 1900 plus. Now, I went to dig up some of my old charts. I still haven't been able to find them, but to the best of my ability, we have been marking this top as a major 5th, and that makes a lot more sense. It is a record high. It is the end of this long rally upwards. That rally upwards was a multi-year rally, of course. This wave count, the 1, 2, 3, 4, 5, I can do it in a couple of different ways, but I know that on my older charts, as we were going through this period, we did really end up with a major 5th at the top. From there, I believe we went into our corrective period, which of course was a major A wave. We've talked about that. And the way that I look at it is we had waves 1, 2, 3, 4, 5. That completed 5 out of 5. That completed this 5th. And that completed this move down, which was our major A. I think major A has been completed. I think that this rally up, which is what we've experienced this year, is part and parcel of a counterwave or a major B. I hope that answers your question. Fact of the matter is, statements made by a member or president of the Federal Reserve sent the markets into gyrations. Dow Jones Industrial Average closing off almost 400 points on the day, over a 2% drawdown at 18,085. But the key is the actual drawdown today was 394 points, over 2%. S&P's also taking it really hard, off about 2.5%. Take a look, traders, at this daily chart and the action that we saw as this market moved down, 2116.75. It's still actively trading. It will close in just a little while off 54 points. As I said, a drawdown of about 2.5%. And NASDAQ also trading much lower on the day. That's off about 2.5% at 4670, down 122 points on the day. This has been a day that I think people will remember, as the expectations of an interest rate hike roughly went from 1 out of 4 to 1 out of 3 in terms of probability. But you can see how that slight change in perception definitely influenced the markets on the day. So with this incredible sell-off in U.S. equities today, where could they start to trade to next week? Of course, if they continue to trade under pressure, we've broken through some key levels. They're both fib-based as well as having some good technical evidence. This is a 23% retracement of this move here where I put my arrow. And as you can see, we've got a top here, a top here, a top here. We've absolutely broken through that particular price point, which came in at around 18,142. We're at 18,085. The next real level of support on a technical basis doesn't really come in until about 17,900, and that's based upon a fib retracement, this being a 38% retracement here. We also have good historical data showing us that it has been a top. It has been either resistance or support at some time in the past. If we have continued pressure, we could easily see the market slip to these two areas. You know, traders, to say that we had an interesting week is absolutely an understatement. In fact, this week has been very peculiar in that when we look at the U.S. equities markets, they were absolutely quiet with fractional gains as well as fractional losses on a daily basis throughout the week. That, of course, up until today when we saw the Dow close off almost 400 points, a 2% drop, 2.5% drop in the S&P, and pretty much across the board in U.S. equities, we saw a tremendous sell-off. At the same time, we saw the dollar gain strength and the precious metals really succumb to pressure. Now, the precious metals had that big spike really at the beginning of the week. We had a shortened week, of course, due to Labor Day. Following day, Tuesday, we had a $27 rise in gold. That was basis the COMEX contract. And then we saw that huge spike up erode little by little, day by day throughout the week. Now, when we got to a critical area in the market, of course, we did trail our stops up. I was under the belief that we would possibly find some support in this area, but at the same time, I knew that we needed to protect ourselves in case something fundamental changed and affected the market in a negative way. And that's exactly what happened. A statement by a single Fed president really set all of this in motion. So inasmuch as I wish we could report to you that we made a tremendous amount on these trades, the fact of the matter is we did profit on both our gold and silver trade, single digits, about a 9% gain in our gold trade, double digits in our silver trade. But nonetheless, we are going to go into this weekend flat with no active trades on the books after pulling profits. My sense is that we really want to see what kinds of statements start to emerge over next week. We've got about 12 days until the FOMC meeting this month kicks off, so we've got plenty of time to really see the volatility ratchet up. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you next week on Monday for another daily update and review. Bye-bye.